Hello, Chasers! Welcome back to another episode of the Chasers channel, the podcast where we dive deep into the world of business and finance and bring you expert advice to help you make informed decisions that will bring you closer to achieving the dreams you are chasing. Today's episode is about a question we received recently. Can I transfer residential property to my SMSF? I'm your host, Chris Becks, a financial and business advisor with over 40 years experience and the founder of the multi-award winning CBEX Business Solutions for Good. And because this is a financial planning topic, as an authorised representative of Interprac Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The information provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the relevant product disclosure statement before making any decision relating to a financial product. Chris Becks is a director of CBEX Financial Solutions and an authorised representative of Interprac Financial Planning Proprietary Limited, AFSL 246638.
Okay, now that is done, let's dive into this episode. Often, superannuation can be a great structure for people to hold their property in, and is generally the reason why a Self-Managed Superannuation Fund, or SMSF as they are known, is usually chosen. Retail and industry funds, those compare the pair funds that you see on TV, they don't allow members to hold property. Superannuation is usually a lower tax environment, and they can also offer protection against bankruptcy. Now, sometimes you may feel that a property that you own in your own name would be better off in your SMSF, particularly as your property has no mortgage or debt, and your SMSF is cashed up. In that case, what do you need to consider if you would like to move the property into your SMSF? This was a question that one of our customers asked recently. Only certain properties can be transferred to your SMSF to avoid being classified as an in-house asset, which is an asset that is connected to a loan or investment from someone related to the members of the SMSF, and to be exempt from penalty tax and to meet the related party acquisition exemption rules. Business real property, defined by the ATO, generally means land and buildings that is wholly and exclusively used in one or more businesses, and is able to be transferred to your own SMSF. For example, if you were in possession of a residential rental property, you may not be able to move it into your SMSF. A shop, on the other hand, could be transferred into an SMSF. SMSFs are prohibited from acquiring any assets from related parties, unless those assets fall within one of the specified exceptions. One of the exceptions is if the asset is business real property and is acquired at market value. The question is then whether the residential property can ever fit this definition. The law defines business real property as an interest in real property where that real property is used wholly and exclusively in one or more businesses, regardless of who carries on that business or those businesses. There are three main ways that residential property can be business real property. 1. Residential land held as part of a land developer's business. 2. Residential land used in the business of renting properties. And 3. Short-term accommodation. Any residential property that qualifies as business real property must be acquired at market value by the trustee of the SMSF. While technically there's no requirement for the property to be valued by a qualified independent valuer, such a valuation is best practice and can assist to show how the market value of the property was arrived at, if ever questioned by the ATO. Beware the taxman. Transferring an eligible property to an SMSF is considered a sale, which means that capital gains tax may apply. You need to consider what your capital gains tax obligations may be, and if you are entitled to any small business concessions to reduce that gain. You'll also need to consider whether stamp duty is applicable to the property. Some states, Victoria, New South Wales and Western Australia, offer concessions on transferring property from your own name to your SMSF in certain circumstances. And of course, South Australia has no stamp duty on commercial property. The ATO will also want to see that you have considered that the level of investment in the property still meets the investment strategy of your fund, including diversification of assets, liquidity, and maximisation of member returns in your fund. So, to answer the question, can I transfer residential property to my SMSF? Well, the answer is it depends on whether the residential property, 1, meets the definition of business real property, 2, qualifies under one of the 3 ways residential property can be business real property. They were residential land held as part of a land developer's business, residential land used in the business of renting properties, and short-term accommodation. And point 3, whether there may be hidden tax consequences in doing the transfer. So beware the taxman. As with any financial planning or matters relating to tax, always get some advice from an expert before you do anything. It's good insurance against costly financial mistakes. Thank you for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon. Have a great day.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.